SMCI had a big rally into close, and in this video we're going to be going over why I'm shorting SMCI for a third time. So far I am 2 for 2. I closed out $4,700 on my short this morning, and then last week we closed out about $18,000 in profits. And so now we're shorting for a third time. You can see that these are the positions that I ended up taking. If you guys want access to the show notes and to stay up to date with all of my moves on SMCI, just go to our website, thtcommunity.com, and go to the analysis and blog section, and you can follow this blog. You should also be following our Twitter account, which I leave my link down in the description. I post all of my stuff real time over there, and you can also sign up to be part of our Discord community, which you guys can see here on the website. So the position that we ended up taking was first an execution. Actually, before we even do that, I want to explain why we're going short for a third time, okay? Then you'll get a better understanding of why I was looking at these potential entries. And if I would have just been a little bit more, just slightly more, patient, I probably would have done even better. You guys can see it's funny because this is my premium group. If you're part of the Discord community, you guys know this, but we were talking about SMCI. I was saying we're getting back towards our short, and I knew that there was a very good chance that we were going to see the bounce today back to test our fair value gap. So if you guys notice here, we ended up today, or I'm sorry, in the past couple of days, coming back up to this $1,150 level. Now, my initial reason for going short was the fact that we did not gap up and take out 1078 earlier in the week, especially when we got the news of the S&P 500 inclusion. We covered that extensively in this morning's video. Now, at this current moment, we had a fair value gap sitting here between $1,122 down here to about $1,095. Now, what these fair value gaps are, you can see there's a gap here, and you can see there's a red one here, and now a green one here. These gaps are basically inefficiencies in the market. There's not enough time for the actual orders that big money wants to fill in order for those to fill. So in most cases, we end up seeing a retracement back up into that level. And you can see that as we pulled back down to equilibrium, very solid chance that we're going to bounce and come back up to test this fair value gap back up at like 1120. So we closed our profits out this morning here at 1,000, and our plan was to wait and see if we would make that fair value gap back up. Now, the other thing that you could do here is just a traditional Fibonacci pull from up here at swing high down to about swing low. And if we draw this all the way out, you're going to notice our golden zone here lines right up with this fair value gap, which means that there's a very high chance that we will probably reject here. And that's why I ended up taking my short. And so now my plan, my actual entry and exit, is to get in here. We have an average right now of about 1077, but to get in around here, look to set my stop loss up on a higher high in this premium zone. And if we reject, I'm looking to take my profit at least back down at equilibrium, but really I'm looking to take it down at $900 because I think that there's a very high chance that we can come back to test that level. And if we look at that, that will give us at this point about a 3-to-1 risk versus reward ratio. Now that's great and all, and I don't even care if I end up losing money at this point because we are already up. We've banked profits already. Doesn't mean we have to be reckless. Doesn't mean we have to go throw the caution to the wind just because we're up some money. But it does mean that I can sit here and say, you know what, I'll risk another $5,000-$6,000, take some of that profit off the table in order to make potentially another $17,000. That would be awesome if we actually drain back down to 900. And so that's the way that I think about it. That's the way you have to manage your risk, right? And we're not just going short just for the sake of going short. At the end of the day, I don't want to beat a dead horse because I talk about it a lot here, but we had very strict requirements for entering short in the first place, every single time we went short. And that's how you have to trade. And if we ended up losing money, so be it, because you're not going to be right all the time. So your goal shouldn't be to be right. Your goal instead should be focusing on trading your actual edge to perfection. And if you guys want to trade with us every day, check out our Discord community and get access to all of our resources, all of my trading bots, all of the amazing stuff. Go check out our website, thtcommunity.com. You can access to all of our blogs, and you can join all of the premium stuff if you guys want once you're over there. Thanks for all the support. I'll see you next time. Peace.